Hey, hello everyone. Welcome. I'm Chris with Elliott Wave Cafe. Welcome to today's video. What I want to talk about today is just Elliott Wave, just looking at the wave count, discussing the structures here, the pullbacks, look into some fibs, stuff like that. I think you might find it interesting. So we'll take a look at ELF, but it doesn't matter. It can be this one popped out on my radar today because I did open a long position here and it's probably going to be a shorter term until I look a little bit more, and I just kind of got started. But let me give you my thoughts on it because I never really looked at this company, I know I think they make beauty products or what have you, but it does have an interesting structure, and I think it's worth learning a little bit about it and kind of how this developed from the lows and kind of what do we have here. And if you haven't counted this, go ahead and give it a try. But it looks quite interesting. So what I usually do, I look obviously to the left, and I see that post IPO, we moved lower, right? So this was the excitement with the IPO, and then clearly, as it usually happens with a lot of companies, when they become public, those that benefited from having shares before that, they usually sell into that, cash out of this company and move on with their life. So that's probably what happened here. And you can see that it went and kind of got as low as $6.70 after roughly $30. So we're going to start the wave count from the low. And we're going to move to the upside. And a couple of things jumped out at me. First of all, you see kind of the biggest run that this had, and this is a log chart, is this wave back in here. And then this seems to be kind of the biggest correction so far since this big run happened. So I'm never really sure, how to count it, exactly when I open the chart. So I'm just trying to kind of look at the structures and say what makes the most sense. The first thought that comes to mind is that I'm trying to find a way somehow to label this as as a third wave advance, being so strong. So if that's a third wave, that means that this must be a 2, and then if that's a 2, then whatever happens before, there must be a 1. So we're going to start here and go with the wave 1 and the wave 2, and I'm going to take this and probably move it up here to the top, and then go from here with the wave 3, 4, and 5, and let's just kind of do that like that. So again, probably I don't think that that's a B wave, but again, it doesn't matter right now. So we're going to fix it up a little bit later. So now what do we do with this wave that's here? Because clearly the drop here, and that's, there was a B wave, a sharp B wave, almost like he wanted to make new highs, but it can also be a wave 5, just kind of slightly truncated. Or even if it made a small new high, when you look at this, you can count 1, 2, 3, big 4 and 5, and but the problem is the nature of this decline looks like that sharp C wave decline, and that's what makes me think that that's a B wave. So what I'll do is I will go, and I don't think I'm going to spend time going inside these structures. I can, maybe if we have a little bit of time, I'll do, but let me just kind of label this in an A, B, and then down in C. Okay, like that. And then look what happened right after the IPO. Like, people got excited. This trend line, or started to run up. It was a nice impulse, and then all of a sudden they flushed everybody out before it began kind of a bigger run. So they will do that sometimes because markets don't want you to the market gods don't want you hanging around in there too much. So if that's a wave, so if that's a correction, right, and we have a 5-wave structure after that, then we got to start this with the wave 1. So we'll go wave 1, wave 2, and now this 1, 2, 3, 4, and 5, that's a wave 5. That's a wave 3, right, in 5 waves, and then this whole sell-off, right, in a wave 4, and then what's next is a wave 5. So now, without modifying, I want the software to switch that. So that switched it to the next lower degree in there, and then we want to switch that as well. This is like a primary, and then this is an intermediate degree count. And so that means that now we're beginning a wave 5 advancement. Now this looks fairly pretty, and I would not fault anybody for kind of counting it like that. I mean, I do have some issues here with this decline 1, 2, 3, 4, and 5, and this is the first thing that kind of this is kind of the first thing that jumps out at me and makes me think, like, I don't know if I'm right in this approach. The other thing, so again, I would not fault anybody from believing that, because it points to higher prices, right? No matter how you label it here. So now the problem that I have, so I have a little bit of a problem with this decline, and then I also have a problem with the depth of this wave, with this wave 4. So if I calculate that for V3, well, actually, it's not that bad. So it's a little bit more than 38.2%, and it comes almost close to 50%. So it's fine. One way to kind of clean this, and this is what's going to take me to the other count, is by moving this wave here. And looking at this as a truncated move of this move, and then labeling this as an ABC in 3 waves. But if you do that, then this correction here becomes too big. You don't have anything in here like a second wave type of a move to count this wave 5 in 5 waves, 1, 2, 3, 4, 5. So there's really nothing there to kind of. So this is one way. I want you to maybe kind of look into this and see if you like it, and you can maybe open up some of this and study it a little bit more. But even moving this wave 1 up there and doing this like some kind of a diagonal in a wave 5, could work, because you would start at the bottom and go into 1, 2, 3, 4, and then from here you would have a wave 5. But that's, in here it's a little bit tricky. So 1, 2, 3, 4, 1, 2, 3, 4, 5, and this wave in here, it's problematic. So basically what goes through my mind right now is that this looks better as a wave 5 on itself, because it's got a lot of overlap, right, in terms of that, because wave 5s allow us to have that overlap, because they could be ending diagonals of some type, and then gives us that a bit of more luxury to count them instead of a wave 3. The wave 3 has to be perfectly kind of in a 5-wave move, almost as perfect as possible, right, within the rules. So leaving this back here, it would seems to make more sense, because then you could have a 1, 2, 3, 4, and then this whole move in here, it's a wave 5. Then you have a wave A, you go up in B, and then you come down in a wave C in here. But putting it up here, it wouldn't be a problem either. So it doesn't bother me. Either way, it was a very short wave 2, almost like shorter than even 38%, which led to that kind of massive rally that was coming up next. So now you can see what I you know, when you have that kind of 1-2 and then you have another 1-2 in here and it continues to go and break, and then you have that large wave, third of a third in Elliott Wave, which is the kind of the most explosive wave that there is. So now this is one way to kind of look at this, and I'm going to delete this, you know, and let me just kind of go here and delete it. Okay, and I will do another one, and I'll be quick here, but basically the way I was thinking about this, because of the mass that I have up there at the top, is like, you know, how else could I look at it, and if I would like it a bit more, because the depth of this decline in here, it looks to me to be more of a second wave than a wave 4, because it's so big and it doesn't match with anything else, with any other of these declines, right? So even when we, you know, even if when you compare it against, because it was basically part of this structure, right? It was like 1 2 1 2 3 4 5, so it was 1 2 3. So this move in here, you know, you kind of have to compare it with that. And there is, you know, if you know something about that guideline of alternation, you know, usually, you know, those corrective waves, they look different, right? If one it's very deep, the other one it's more sideways, or the other way around. So you know, from that aspect, it doesn't look that good. So here is what I have. I'm gonna go here with the wave 1, right? Same thing, a wave 2, but now since I know that I prefer to have a wave 5 over there at the top, then how do I make the rest? Well, then I gotta have a wave 3 in here, a wave 4, and a wave 5. Okay, now check this out. This drop in here, it doesn't come in the territory of the wave 1. Otherwise I would get a warning signal there. So it's basically 1996, and look how important this level is. How the market, even here in this B wave, it never kind of got above it, and we saw lower. Then once we broke, it held on the way back down. So now I'm happy with this wave 1, 1, 2, 3, 4, 5. I'm happy with this wave 2, A, B, C. I'm still labeling this as a 1, 2, 3, 4, and then up in 5. Now I have alternation between wave 4 and wave 2, because you can see how wave 4, it's, you know, it's correcting just a little bit versus what the wave 2 is. So you have, you know, a nice look up there. And then you have a wave 5. But check this out. If I move this over, like I kind of, you know, smelled from before that it's one thing that bothered me, now you have this. Now you have a wave 1 that starts the bottom, it's extended, you come down in 2, you do a 3, a 4, and a truncated 5th, where the market loses a lot of ground. If you look at the RSI in here, it's diverging between wave 3 and wave 5, so it's coming lower. That tells you the market is losing momentum as it's moving higher. And now you're correcting in a nice, beautiful ABC. So you have an A, B, and C right there. So what this does now, this makes this whole move from the bottom to the top, since it's a 5-wave move, makes it a wave 1. This becomes a wave 2, and we give a lot of room for growth for ELF into the wave 3 and, you know, 4 and 5. We don't know where that's going to go, but that's just kind of the idea. So now you see how interesting this becomes a truncated. It's a very sharp move in a wave 3. You drop in 4 and you go up in 5, and then this becomes an extended wave 1, you know, and then you measure the depth of the wave 2, which is again in here, close to between 38 and 50%. And here is something else that I thought about. Look at the pullback from this low to this high, and kind of measure that pullback with the fib, which is super interesting. So you go here and you put it up at the top, and that is the 61.8, that magical number that we all love. 61.8 pullback exactly of this latest rally, which this is kind of how I thought about it, because this very well could be, let's say, another 1-2 sequence, but it just doesn't fall that well into my wave count. You would have to be like some kind of a 1-2 1-2 and then further out. But I'll keep this in mind, but I don't think that that's what it is. But I do like the fact that it came into that 61.8. So you combine that with the 38.2, and the only difference is there was really nothing, unless there was some type of a moving average that was coming in here that could look, that looked interesting. There was really no other levels other than, maybe the low back there, 48.10, which kind of held. So I'm going to delete this, and again, no matter what, we're saying that the market is moving higher in here, either as part of a wave 4 from the original count to make a new high, either as part of a 1, 2, 3, 4 extended fifth wave with an extended wave 1, a drop in this wave 2. This is a completely different sequence, and then it's moving into wave 3, which means that this move in here, it's wave 1, and that's a 2, or it's still a wave 1 in progress, 2 new highs maybe, a wave 2, and then, because usually what happens is by the time the market, so here is what I want to show you. By the time the market gets up there towards new highs, usually sometimes it stops up there, right? Even if it goes a bit higher. And then I'm going to hook this to that wave 3, so just so it gives me the blue labels. And then it does that drop. So I want you to imagine it. So it goes there, right? It does that, creates a neckline, right? It could spend several months in here as a wave 2, then it breaks, retests, and then it goes. And that's how most of the stocks kind of break out after coming from the lows. So let me go to a 1-week chart. There you go. And I want to see kind of what happened. I mean, this is just beautiful in here, right? Look at this, 1, 2, 3, 4, and down in 5. So A, B, C into the 61.8. So now from the lows in here, we're moving up in what could already be a wave 1 of the lows. That's a nice ABC, beautiful down. Try to make this just a little bit bigger. So then if I go from the lows here, I go in a wave 1, ABC for the wave 2, which means that, likely we're in a 3, 4, and 5. Now, because this move in here was so strong, I don't know if the market will have the same strength for this wave 3 and how that's going to be, because nobody really knows, right? I'm just kind of thinking out loud that, if this was strong, I'm not expecting the next move to be as strong as this one. I don't think that's a wave 5, because I don't have a wave 2 of a proper outlook here on the weekly time frame to count in something like a 1, 2, 3, 4, and 5. I don't have divergence here between on the RSI. If anything, it looks very strong. So I don't think that that's a wave 5. I think it's the beginning of a wave 3 in ELF. And you also see, so it's exactly this section that's here, right here, right? This section, it's exactly what I was talking about, that I'm thinking it might happen up at the top you know, from a fractal point of view. So this is that drop. That's going to be that drop. Okay, so you have basically this move here. The market goes up there and creates this. All right, and then you break. So it's that inverted head and shoulder, that cup and handle, that kind of happens up at the top. And the one that we have, you know, over here right now. So if I'm just kind of, you know, get a line like that, you can see how, you know, how beautiful this wave and this wave look, and how it creates, you know, that break and that inverted look. So yeah, I kind of like it. I mean, it could be that we might get a retest in here. So once this wave 1 or this wave 3 completes, unless it was done right there, you know, you could get a retest, or you might not. It might just kind of continue to push. So this is the reason why I've opened a long position on ALF, and you know, we'll see kind of how this goes, but I'm looking for kind of this wave 3 to continue. And you know, now there's ways to you know, go to the daily and just kind of check the stops, look at the moving averages. I mean, I talk about that in other videos too, kind of how to place those. And but for right now, I think there is, you know, decent potential here for this, and we'll revisit this another time. I'll try to save it. And so to kind of go back and recap, I want you to remember those two things, right? The fact that this could be a wave 4, and we're a wave 5 structure will look just like this in a 1, 2, 3, 4, and 5, and then the market will fall into some kind of a correction for a wave 2, or you know, we're in a 1, 2, 3, 4 extended fifth with a wave 2 now, and we're getting a wave 1, again a correction. So both moves, even if it's a wave 5 or a wave 1, will require some kind of a setback. So this is where Elliott Wave becomes helpful and interesting, because even if you have two wave counts, and if they match, then you know when it's likely to be an impulse and when it's likely to be a correction when they start to match. So that's the value, besides some other things that I mentioned, but that's kind of that's the best I think use of it when wave counts kind of align. That could create some powerful trending opportunities, I should say, trading opportunities, or prediction opportunities. So I'll leave it at that. If you enjoyed it, let me know. Let me know other stocks that you want me to look at, if you have anything else that looks interesting. And I'll see you next time. So thanks for watching. Bye-bye.